Hello and welcome to our YouTube channel. In today's video, we'll be talking about if Bitcoin can be a hedge against inflation. Curious to know about this? Watch with me till the end to find out. Some experts believe Bitcoin's recent rally is related to the increase in inflation, as Bitcoin has often been referred to as digital gold because of its potential to be an inflation hedge. But can the cryptocurrency really be an effective hedge against inflation? It depends. One of Bitcoin's most significant advantages over other cryptocurrencies and even fiat currencies such as the US dollar is that it's said to hedge against inflation over time. Unlike other currencies, there is a limited supply of Bitcoin tokens. There will only ever be 21 million tokens in circulation, and according to current estimates, we should reach that cap around the year 2140. Because there's a finite supply of tokens, that should theoretically help Bitcoin retain its value over time. Bitcoin has outpaced gold substantially year to date, with the digital coin up nearly 133% and the yellow metal down by 4%. The divergence calls into question whether investors are opting for Bitcoin over gold as hedge funds against rising inflation, but the strategist behind the world's largest gold-backed exchange-traded fund begs to differ. I think it's quite possible for these two assets to coexist quite happily in the market because they do completely different jobs. George Milling Stanley, chief gold strategist at State Street's SPDR ETFs. However, as inflation has surged over the past year, gold has underperformed. While everything from housing prices to gasoline to energy costs have soared, the price of gold has increased over the past 12 months. Bitcoin, though, has seen its price continue increasing as inflation climbs higher and higher. It appears then that Bitcoin might be a more effective inflation hedge than gold. That said, there are other factors to consider that could affect Bitcoin's long-term inflation hedge potential. Want to know why Bitcoin is a better inflation hedge than gold? Make sure to like this video first and then smash the subscribe button and click the notification bell right now, because if you don't, your crypto investments will suddenly disappear. Moving on, Bitcoin isn't tied to one currency or economy. Like gold, Bitcoin isn't tied to a particular currency or economy. It also isn't controlled by a small group of companies or stakeholders. Rather, it's an international asset class that reflects global demand. In times of high US inflation, investors must take on more risk to offset the decline in existing asset values. For example, a 3% dividend yield may normally supplement income in retirement. But inflation is 6%, it simply isn't good enough. Bitcoin could be one of the better options outside of equities because it sidesteps many of the political and economic risks associated with the US stock market. In this vein, Bitcoin and other cryptocurrencies are one of the most practical and simple ways for an American to diversify away from purely American revenue, income, and assets. Next, Bitcoin has a limited supply. One of the best reasons why Bitcoin is a better inflation hedge than other cryptocurrencies is due to its fixed supply of 21 million coins, nearly 19 million of which have already been mined. An ironclad fixed supply means that new coins can't enter circulation, so there's no risk of inflation. By contrast, a country like the US can just increase the money supply through spending and buying government bonds to lower interest rates, reduce the spending power of a dollar, and inadvertently cause inflation. And lastly, Bitcoin is an easily transferable store of value. Like gold, Bitcoin is durable, easily interchangeable, secure, and scarce. But unlike gold, Bitcoin is also portable, transferable, and arguably more decentralized. Gold supply is mostly controlled by sovereign nations like the US, China, Germany, and other European countries. Theoretically, anyone in the world can store and easily protect their Bitcoin much easier than gold. Let's now talk how will Bitcoin fare over the long run. Although Bitcoin has had a phenomenal year and has managed to hedge against inflation in recent months, it's too soon to say how it'll fare over decades. Bitcoin has only existed since 2009, while gold has been valuable for centuries. With such a short track record, it's tough to tell whether Bitcoin will have the same staying power as gold. Bitcoin is also extremely volatile, which could affect its potential as an inflation hedge. There are many factors besides inflation that can impact the price of Bitcoin, and there are many several forces at play when it comes to its recent price increase. And with that said, companies like Massachusetts Mutual Life Insurance Company is jumping into the institutional Bitcoin game with a $100 million investment in Bitcoin and a $5 million equity stake in New York Digital Investments Group or NYDIG. Well, the reason why these companies are investing in Bitcoin might be because of its potential from being the inflation hedge. Still, nobody knows for certain how Bitcoin will perform as an inflation hedge over time. While it does seem promising right now, Only time will tell whether it continues performing well over the long run. So, what are your thoughts about it? Can Bitcoin be a hedge against inflation? Let's know your thoughts in the comment section down below.